Welcome to the Country Club podcast, but not the kind with dress codes and tea times. This is a different kind of country club, one where country living meets real estate, community, and adventure. I'm your host, Diana Cassidy-Bush, and your trusted guide to navigating life beyond the city limits. Whether you're looking to plant roots in a small town, find the perfect recreational escape, or make smart investments in rural properties, this podcast is for you. Each episode will dive into everything from buying your first home, securing the best investment deals, exploring cottage life, and embracing the beauty of rural living. You'll hear expert insights, real-life stories, and practical advice to helping you live, play, and invest with confidence. Because in real estate and in life, it's more than just about buying property. It's about making the right plan, seizing opportunities, and building a future you love. So grab a coffee, pull up a chair, and let's talk about making your dreams a reality. Welcome to the Country Club, where home, community, and opportunity come together. Hello, I'm your host, Diana Cassidy-Bush. Thank you so much for joining us on the Country Club podcast today. I'm so excited that you're here. The last episode, I gave you a little assignment to do, and I just wondered how that went, if you took some time for you to write down a goal. If you did, I'm so happy for you, and you're now 42% more likely to accomplish that goal, so congratulations. I hope you're inspired to take some action towards your future that you want to bring to reality for yourself. In today's episode, we have an exciting topic. We're talking about first-time home buyers. I just want to introduce Alana DeLong from Dominion Lending. She's our guest today on the podcast. And today we're going to be talking about first steps to becoming a home buyer. So, Alana, can you tell us a little bit about yourself and how long you've been in the lending industry?
Sure. Thank you so much for having me, Diana, on your show.
My
I
pleasure.
appreciate it. And I've got many, many years experience. I've been doing this for about 30 years. So I've been a mortgage broker with Dominion Lending for the last 6 years. And the beauty of working with a mortgage broker is we have several lenders that we work with. So we have the opportunity to look at different options and see what the client's needs are and then place them with the appropriate lender.
Awesome. How can you have 30 years experience when you're only 20?
I wish. I started my career as a legal assistant. I did that for 7 years and then I was interested in the real estate side. So I ended up switching over and getting into mortgages. So
Awesome. So you've got a little bit of a legal background as well, or legal knowledge.
yes, that helps a lot when you're in the real estate world.
Sure does. So today I just wanted to bring you on just so we could talk about first-time homebuyers. I don't know about you, but we're experiencing what feels like a comeback to the table with first-time homebuyers in 2025.
Absolutely. With the interest rates dropping and the new programs that opened up in December, longer amortizations, it's certainly making it for a busy market for sure.
All right. So we just want to start kind of at the beginning for first-time home buyers. And what are some tips that people should consider when preparing to purchase their first home?
So your first step in getting prepared to purchase a home is speaking to a mortgage specialist or mortgage broker, somebody who has experience and is going to take the time to sit down with your client and go through the process of qualifying them. We don't want them out looking at houses before they're pre-approved. Otherwise, they could be disappointed. Maybe they're looking at a $500,000 house and they can only afford a $400,000 house. So it's definitely the first step. I heard a statement that I thought was cool that said, don't get on a plane without a ticket. So it's kind of like the same of, don't go looking at houses until you know what you should be looking at, or you'll be disappointed and maybe you won't get on that plane because you don't have your ticket in place, right? So
yeah, for sure. What are some things financially that they can do besides saving for a down payment to prepare for qualifying?
Well, normally most people are either living at home or they're paying rent, which is going to be considerably lower than, the cost of owning a home because you've got your mortgage, you've got your taxes, you're going to have your heat, your hydro, your water. So I always talk to people about what their total monthly budget is going to look like when they purchase a home. So you're better to try to save that money and pre-plan. So let's say you're only paying, 1,800 a month rent right now and it's all inclusive, and we qualify you for maybe a $500,000 mortgage. So now you're going to be looking at, $2,500 to $3,000 a month in costs. You need to prepare for that. So a good way of doing that is to start paying out that money now. So, if you're paying 1,800, let's put 1,200 into a savings plan. So that will help them, start saving for their down payment as well, but also prepare them for those costs ahead of time. So they're not just shell shocked going from living at home for nothing to now having to pay out, $3,000 a month in total costs. So definitely better to pre-plan and, prepare yourself for those monthly costs ahead of time.
What if you talk to someone and they're not quite there yet? They're not qualifying at the moment. How do you help those people?
Well, those are the people I love to take in and snuggle and, guide them accordingly. Because sometimes maybe they just don't know what to do, right? So maybe they're only, starting a new job, or they're on a contract position, or maybe they only have, a couple $1,000s in the bank, or they haven't reestablished their credit yet. So perhaps they've, maybe don't have a credit card or, a loan or a line of credit yet. So those are the ones that I love taking and sitting down with and being like, okay, here's your goal. Where do you want to be at? And then we can sit down and start a budget for them. We can look at their credit, see where they're at, how much, credit do they have? Do they need to maybe go to the bank and get a secured credit card if they haven't, established enough credit? So there's lots of ways for us to help prepare them before they even get to that position of purchasing a home.
Once they are pre-qualified, are there any sort of tips that you give to them to keep them in that position until they purchase a home?
Well, normally when I'm talking to them, I let them know, this is based on today's rates. This is based on this income, this job. Don't go purchase a new truck and have a $800 payment, because that's going to now decrease the amount of mortgage you qualify for. So it's very important that we talk about, this is today. So lots of things can change. So it's definitely, don't go switching jobs or take a break. Definitely, we talk about all that they need to continue. Don't take out any more debt. Don't go co-sign for anybody, that type of thing.
I know young people think vehicles are very important, but maybe not at the cost of their dream home.
Well, I know I say to them, they come in and they're like, "Oh, I just bought this new vehicle." I'm like, "Oh, why didn't you come first?" Right? Because now all of a sudden they've dropped their mortgage by, 80 or 100,000. They can't believe the difference that a vehicle loan could definitely, pull back for sure. So, because
Yeah.
every 10,000 is roughly $50 a month. So if all of a sudden they've got an $800 or $900 truck payment or car. I keep saying truck because trucks are more
Yeah.
expensive, but a vehicle loan, then it definitely pulls back on the amount of mortgage they would qualify for.
Yeah. Do you talk to them about what additional costs they may have to prepare for when purchasing?
Yeah. So we talk about the down payment, which obviously is the most important. So first time home buyers require 5% down of the purchase price, minimum up to 500,000. If they purchase anything over 500,000, then they have to have 10% down of that amount. So we do go over the cost of the down payment. I talk about land transfer tax, their legal fees, and again, just going over their budget and, because we don't take daycare into consideration. We don't take gas. We don't take insurance. Like, there's a lot of debts that we don't require to fall in their debt ratio. However, those are debts they're going to have to still pay. So even though we have a qualification of how much mortgage they can qualify for, I still like to talk about, all those other items that they're going to have. So just to make sure that at the end of the day, they're still going to have enough to feed their family, right?
Yeah. Or go buy a cup of coffee or,
Yeah.
yeah.
Not have to give up the Starbucks every day, right? Maybe once a week.
Yeah. So you alluded to a few new programs that are out there. I think there was a few that came out last spring.
December 2024 was the big one. So first time home buyers, as long as you haven't owned a home in the last 4 years, or at least one borrower has not owned a home, they can purchase again with, they can always purchase 5% down, but now they can take a 30-year amortization versus a 25-year. So it actually equates to about $50,000 more with the current rates today.
Wow,
So
that's
it's
great.
quite substantial for sure. So those first-time home buyers that have been sitting on the fence for the last year or two when the prices got so high, this is definitely making a huge impact for sure. So that one I find is the biggest one. They've opened up the insurance. So if you don't have 20% down to buy a home and you're going to have to take mortgage insurance, a million was the maximum purchase price, which isn't so much in our area, but definitely we see a little bit of it. It's gone to 1.5 million. So that's definitely helped in the bigger urban areas for sure. So that was another bonus that they don't require 20% down on that whole amount now. So that's going to help Toronto and Vancouver and the bigger cities for sure. And they increase the amount of down payments. So there's lots of savings plans out there. There's tax-free savings. There's your RRSPs you can use as a first-time home buyer. There's a first-time savings plan that you can put $40,000 into tax-free. So there's lots of great accounts out there that the government's finally, opened up. So lots of ways of saving money and tax-free money and shelter that tax. So that's great as well. So
Land transfer tax? Is there any exemptions or like special offerings for first-time home buyers with land transfer tax?
So as long as you've never owned a home ever anywhere in the world, you can have a
In the
one-time
world.
in the world, basic. Yeah, that's what they ask you
Wow.
at the lawyers is anywhere in
Oh,
the world. So you can't have owned a house out west and come to Ontario or anything like that. So as long as it's just a one-time exemption, and it's only up to a purchase price of 370,000. So
okay.
anything up to 370,000, they will be tax exempt. So they basically get a credit of $4,000. So I think it's like 369 and change. So I say about 370,000 is tax exempt. So if you bought a home for say 500, you're just going to pay the land transfer tax on that 130,000 approximately. So so it's definitely, $4,000 to a first time home buyer is a huge savings for sure.
Yeah, absolutely. That's great.
Mhm. Mhm.
So in the industry that you're in, there's always lots of chatter about interest rates and, looking ahead to see where we think things may be going. Do you have any sort of insight or what's the industry thinking where interest rates are currently and where they may go in 2025?
Well, they're definitely lower than they were 6 months ago. I just was looking at a pre-approval where they were qualified at 5.39. So I thought, oh, great. Now I can qualify them at, 424. So definitely about a percent down than we were about 6 months ago. So it's definitely
Wow.
dropping.
Yeah.
The Bank of Canada has dropped their rate 7 consecutive meetings. So that's a huge discount on the variable rate. So anybody who's been sitting in a variable rate mortgage is definitely doing the happy dance right now. Technically, variable rate has always been the lowest rate over, if you look back over 20, 30, 40 years. But that whole COVID didn't pan out quite so well for the variable rate holders. But a lot of them just held strong and steady and paid the higher payments, for those year and a half, I guess, at least. But no, they're predicting the rates will continue to drop. This week, our chief economist announced that they expect the variable rate will drop another quarter in April and another quarter in June. So those look like they're going to continue to drop. So when you get a variable rate mortgage, it gets confusing because there's a Bank of Canada rate, there's a lending rate, there's a variable rate. So the Bank of Canada rate right now is at 4.95. And when you apply for a mortgage, you get a discount off of that. So depending on which lender I use, how much down payment you have, how much equity, you might get like prime minus 60 points, or you might get prime minus 50. So again, the variable rate, if that continues, we should hopefully see a 3 in front of it by the summer. So that will be great again for especially first-time homebuyers trying to get in. First-time homebuyers like a little bit more stability. So a lot of them are looking at fixed rates. Some of the lenders have come out with some great fixed rate lower terms, so like 2 or 3 year. So that's kind of what a lot have been leaning on because we don't want to predict the next 5 years. It's just too hard to figure out what, is going to happen over the next 5 years. So 2 to 3 year has always technically been a higher rate than the 5 year. they always offered a lower rate on a longer term because they're holding your business for a longer period of time. But now they've come out with a 2 and 3 year special at like 409 and 414 for an insured mortgage. So those are really great rates. And at least you have that stability knowing, okay, my payment's locked in for the next 2 or 3 years. It's not going to change. So therefore they can, better budget their life and then wait and see where we're at then. So definitely we're on the downslide. I can't see it going up at this point. Inflation has continued to drop. So therefore the rates follow inflation. So
Yeah. There is some discussion about inflation possibly going on the rise again with, of course, the tariff conversation. Any insight as to, if there is inflation from that? I think there's been
well,
some discussion about whether the rates will continue to come down or whether they will hold. Or anyway, if you have heard from your economists what their predictions are.
well, the whole tariff thing is definitely, obviously, we have no idea what it's going to do. However, they do anticipate that it will, the rates will continue to decline. They're not giving us any indication that they're going to go up. So I think the inflation's dropped far enough now. We're into the 1%. So we've got lots of leeway there for the rate. So, and a
Oh,
lot of people are coming up for renewal this year and next year. It's like the highest, like, billions of dollars are coming up for renewal. And a lot of those people got in when the rates were at 169, 179. So I felt in my mind last year, I kept thinking, oh my gosh, if these people keep coming up for renewal and have to pay 5.5%, how are they going to be able to afford their payments? So they said they were going to try to, make a softer landing and get these rates down a little bit lower so that the people that do come up for renewal over the next year to, with those low rates, at least if you go from kind of 1.5 to 3.5 or 4, it's definitely going to be much more affordable
yes.
for those people. So, and a lot of those people have built up equity as well. So there's a lot of refinance going on right now.
Oh, is
So,
that right? Yeah.
yeah. So if people are into some higher, interest rate credit cards and lines of credit, et cetera, they're rolling those in and taking advantage of the lower rates on their mortgage and having equity in their homes. So yeah, hopefully we'll just continue to decline. But again, the people that are nervous, they're the ones that, are taking at least a 2 or 3 year, knowing at least they have a game plan and know what their budget is for the
Yeah.
next 2 or 3 years. So
That's great.
yeah.
Okay, so lots of great information for first-time home buyers, um, and looking pretty positive for them in 2025. Would you agree?
I do totally agree. I've been seeing
Yeah.
lots of people that were sitting on the sidelines for the last couple of years that are finally able to qualify and get into the market. So there's a lot more listings coming up, as you know. I can see lots of signs coming up. So lots more opportunities for them to buy as well. So that's great.
It's pretty exciting for me, being in the town that I'm in, and I'm seeing kids that are not kids anymore, young adults that grew up with my children or played hockey with them, and now they're, starting their future and purchasing homes and making plans for families. And it is one of the most rewarding pieces of the real
Mhm.
estate business that I enjoy. I don't know. Do you find you have a love for first time home buyers too?
Yeah, as you said, our kids are kind of in that era right now where we're like, you can just kind of take them and squeeze them and, guide them. And it's very exciting to watch them get into their first home for sure.
Yeah.
So,
Yeah, and it brings
yeah.
back memories of, our, well, for me, my time as a first time home buyer and how exciting that was. So
And then as you move second, third time, your friends just kind of disappear, don't they?
nobody's there with their pickup trucks anymore. You're on your own. Yeah. Yeah.
Yeah, it's fun to see all our kids adulting now, right?
Right. It is. Absolutely. Okay. Well, any last words of wisdom, Alana?
Well, as I say, I feel this is definitely the market for first-time home buyers to get in with the rates dropping, the longer amortizations, more listings coming on, lots more opportunities for them. So don't think you can't afford to buy a house if you don't have your down payment or you just changed jobs and you're thinking, oh no, now I can't qualify. I have lenders that I've got deals approved where they've been, 1 week on the job. So just there's
Wow.
lots of opportunities out there, and lots of great careers. These kids have spent years going to school, spending lots of money, and getting those educations. So just don't think that you can't afford it. So it's a free pre-approval. We just get together for an hour, and I look over their income and their credit. And as I say, if you don't qualify now, just don't sit on the back burner, because maybe there's something you could have been doing to prepare better, right? So somebody just says, I don't have my down payment yet, I'm just going to forget about it and wait a year. And then we meet a year later, and now we find out, oh, they don't have enough credit. I could have been building your credit with a credit card or a loan or something. So there's just so many, conversations we can have ahead of time. So yeah, the sooner you can talk to a professional and, get out there, and then you'll be better prepared.
Absolutely. I think that's sort of been my feeling just talking to people over the past year, that they sort of automatically disqualify. They felt pretty down about the fact that they may not own a home, or think timing's not right. But
Mhm,
you're right, getting in and speaking to a professional and get a sense of where you're at today, and where,
mhm.
like you say, little things that you can be doing to prepare for that, even if it doesn't work out today, in a
Well,
year from now. As we know, a year comes around pretty quickly. It can make a
yeah.
huge difference if it isn't today. But how do you know till you talk to someone?
And there's lots of different things with properties too. Like, if they're looking at a property that maybe it has a rental unit in the basement, or, they can pull out some extra income there. We can use that income, to help offset their mortgage as well. So again, it's just getting these people in front of somebody, who can guide them through the steps of how to make them qualify. Right. So,
Absolutely.
yeah.
Well, thank you, Alana. It's been really helpful and insightful having you here with us to share kind of the first steps for first home buyers. And yeah, we look forward to working with you again, always, obviously, going forward. And love what a great job you do looking after our clients. So,
Well, thank you so much. I appreciate you and your team. And it's always a pleasure. And we'll look forward to working with you soon.
yeah, thanks, Alana. Have a great day.
You too.
Thank you again to Alana for joining us today. That was some fantastic information for first-time homebuyers and people looking to get into the market in 2025. I want to thank you all for joining us today, and I want to leave you with a little bit of homework. I want to ask a favor. If I would like you to send in any questions that you may have related to real estate to help us shape the conversation about you and your journey in real estate. You can send that through to us via email or through social media, and we would love to hear from you. Until next time, thank you so much for joining me. Your support truly means so much to me. Please subscribe to our podcast, leave feedback, or share this with a friend. I can't wait to check in with you next time at the Country Club Podcast.